watching Let's Chat.
As we mentioned at the beginning of the show, a new year calendar-wise means new tax laws, some which may help you, some of which may not. We're here to help you sort all of that out with Morgan Hill from Hill & Hill Financial. Morgan, good morning.
Always good to see you. Good morning.
Good morning.
Good morning.
See what I did with that? New tax law, the Secure Act. I'm not even sure what the Secure Act is. Break it down.
Yeah, you know what's funny? First of all, it stands for Setting Every Community Up for Retirement Enhancement. Only I think a team in Washington could come up with that acronym. It went into effect January 1st of this year, 2020, and it's one of the most sweeping pieces of legislation to affect retirement in probably the last 20 years.
Wow.
So it affects a lot of things, including some of the tax rules that will affect retirees. I've actually been surprised. Here we are, January 15th. Gosh, I've been speaking last night, I'll speak tonight, I've done video blasts, I've done radio shows, and I've been really surprised at how many folks go, you know what, I really didn't hear about this, I don't know what's going on, and again, it's one of the biggest pieces of legislation change in about 20 years.
How is this going to affect mom and pop?
Yeah, mom and pop. Let's break it down. First, there's some key areas. I'm just going to hit a couple of highlights for today's show. First, most people realize when they have their 401ks or their 403bs, their IRAs, you know, those retirement accounts, there's something called required minimum distributions, RMDs, that at 70 and a half, you have to start taking it whether you need it or not.
Right.
Well, one of the big changes is instead of 70 and a half, it goes now to 72. So folks, if you were 70 in 2019, you had not turned 70 and a half yet, there's some folks who may have gotten a letter from their custodian or whomever saying, oh, you need to take this. Well, those rules are changing now, so that is worth a discussion to have to say, do I need to take this money this year since I wasn't 70 and a half in 2019? And literally, it all happened at the year end, so you'll want to investigate that so you don't inadvertently take a distribution, create a tax bill that you may not have had to take.
Yeah, and that tax bill, from what I understand, it could be pretty substantial percentage-wise.
You bet, because it's all those distributions are taxed as ordinary income, and there's some folks who go, you know what, I don't need it. I've saved all this money, but I don't need it, so it'll give people some reprieve, and that's a good thing. So that 70 and a half goes to 72 is a big change.
Let's say that someone has a substantial amount of money that they're going to leave to their children, grandchildren, or what have you. Does this law impact that?
Oh, that's one of the biggest, Chip. There used to be something in Section 590, sorry to be so clinical, folks, I read this stuff.
No, you've got to.
Section 590 of the Internal Revenue Code is about 200 pages that deals with all the distributions and IRAs, 401ks. But buried inside this thing was something called the multi-generational IRA. Sometimes in slang, people just call it a stretch. It just says that, you know, you to a spouse or a partner, then it goes to kids, grandkids, nieces, nephews.
Right.
Well, they could basically stretch it out over their remaining lifetime, which they could just take a little bit for maybe 35, 40, 45 years. Well, now the rules have changed that the multi-generational stretch IRA is only 10 years. That, folks, that's another big issue. So if all of a sudden you know, I'm the surviving spouse, it goes to my kids, instead of giving them a long time to stretch this out, you've got 10 years. So we've actually been having conversations as recently as this week with folks saying, you know, do you want to maybe do some conversions to a Roth, which are tax-free?
Right.
Do you want to maybe look at having life insurance strategies that would allow the life insurance to pay the taxes now for the kids that are heretofore they may not have had to pay for, because most people leave their life insurance at the old place of work. So we're just trying to say, let's use the tax code to your best advantage rather than, you know, kind of getting pummeled with these changes.
And you have told me on more than one occasion what you just said about leaving life insurance at the last place of employment.
You bet.
There's a lot of, for lack of a better term, unclaimed money out there.
There's a lot of, and we see that.
That could be yours.
Yeah, there's a lot. And one of the other things that we've seen, again, as a full service firm, you know this, we have CPAs, attorneys, we deal with risk management, investing, we do all of it. There's a lot of people hear about annuities, for example.
Right.
You know, and all annuities they've been around for about 2,000 years. They help pay people money. Pensions are basically annuities.
Sure.
Well, there are advertisements that I see, you know, I hate annuities, so should you, buy my book or get my pamphlet. Well, the federal government has actually weighed in on that and basically with this new legislation has said, you know what, we're going to encourage the custodians, the administrators of 401ks, you know, maybe the Fidelities, the Schwabs, those organizations
Right.
to actually include annuities now as one of their investment choices, because they want to make sure that people don't run out of money in the future. So these are just 3 of a number of really big changes. And we just encourage folks to get good information so they can take action rather than being flat-footed.
And at the end of the day, it's never too early to start planning for your retirement
You
years,
got it.
nor is it too late.
Absolutely,
You need to go to the
absolutely.
professionals. And I believe we're going to give away a book or 2 here. Is
Oh,
that
you
correct?
bet, you bet.
Let me show you this book. It is called Building a Better Retirement, the 4 things you need to know to construct the retirement that you've always dreamed of living. Give us a call right now at, we're going to call the 800 number
You
on
can
your
call
screen.
800-887-9647, and then certainly our local number for our offices here in Chattanooga is 423-855-0270. Either of those numbers is perfect.
When it comes to your money, deal with the best. Deal with Hill and Hill Financial. Morgan, thank you very much.
Always a pleasure.
Stick around. We have much more on Let's Chat coming up right after this.